minutes later for another pattern here. So we sat on our hands, we watched our rules, and we looked for our next trade here at 10:49. So we come all the way down, we break below the 74.22s here, we mark up our swing low, and we break below that swing low. Now, one of the most important pieces of digging yourself out of a hole is do not change the way you trade, guys. Don't get larger size, don't go smaller size. Continue to trade the way you do, right? Think of yourself as a statistical machine, right? Every time you take a trade, you are developing statistics. These statistics I'll then go back and review to know how I'm doing. If I change the way that I trade when I take a loss, guys, it's asking for trouble, because now what if this next trade was a loss? Would it be a good idea to trade double the size after a loss? Absolutely not. I don't want to dig myself into a larger hole, so I don't want to increase the size, and I certainly don't want to decrease the size, because look, if I would have traded only 2 contracts here, I would have made half the money. So keep trading the same way after you take that loss, guys, because as you can see here, focus on those rules. 74.17, only 2 minutes later here for the breaker pattern short. +4, +8, +6, 2 off at 4, 1 off at 8, 1 off at 6, 22 ticks, 220 USD. So we were concerned about losing money there until 10:49, put it all right back in our pocket, and of course all that worrying was over nothing. Now we're back at 30, 40 ticks here. It's now time we really focus on other high percentage trades. I should have taken my advice here, because next up on the euro, we have been waiting for this euro pattern all morning this morning, and you'll see here, we'll review it for you guys in a second. Now, the upper left-hand corner, you'll see our initial number here was at 23.99. That was a euro short below 23.99 because the dollar was breaking above overhead resistance. Guys, all you members out there, go into the advanced course all the way to the bottom. Look for the DX pattern video. It's in the members training from earlier this month. All right, so make sure you guys check it out. So we initially looked for the 23.99, but what didn't we see? Members, what did we see? We didn't see any big money. There was no big money in the market on the dollar below 23.99. So being as we had seen already a very choppy market this morning, we decided to wait. We watched as our +10 ticks went by, we watched our +20 ticks went by, and so that potential short trade below 23.99 all of a sudden had a 30 tick profit behind it. Right? Nice big winner for all you members who took that trade with us. Now, I was a little bit hesitant though, because we hadn't seen any big money yet. Right? We hadn't seen any big money yet on the dollar. If you guys recall, I stayed away from it because of that reason. We always want to see that confirmation of the dollar first. Now, of course, about a half an hour later, we now end up trickling down here right before the open from yesterday. Right? 23.64 is my level here in the euro. Now, we then noticed we had support at 23.60, 23.62. So we began to devise our next potential entry. Now, before we took this trade, though, I was very clear on the fact this would be higher risk. Now, why was the re-entry here? Why was this higher risk? It was higher risk because of the simple fact we were no longer at the extremes. We had to wait for the first 30 ticks down because we didn't see any big money. So that was the trade we wanted, at the extremes, at 23.99. Now we're here at 23.58, 23.60. We're a good 30 ticks off that extreme. So now we're no longer in the extremes. Now we're in the middle, right? Now we're in the chop zone, in the center of the bracket. So that's why we said this is going to be a higher risk trade, because you guys know the DX pattern, we like to see that at the extremes. So a higher risk entry short. Now for this one though, the only reason why we took this short was because we saw the big money. Big money buyers in the dollar means, of course, a short entry on the euro. So we took the short here at 11.22. Again, called very high risk because we were not at the extremes. And you can see right here as we got stopped out, just above where we had placed our stop here at 74. So I placed my stop here at 74. We had another resistance level at 80. And I was telling you guys in the room this morning, if you want to be a little more aggressive, you'd put your stop, where did I say? At 85. And what happened? It went all the way to 83. Okay, so I was talking about a more aggressive stop at 85. Hey, you know what? Sometimes we make them, sometimes we lose them. This is how the market goes. What you want to take a look at this though, how do I learn from this? Two things we learned from this. First one, at the extremes. Second one, Wait for that dollar confirmation. Wait for the big money buyers and sellers on the dollar. Now you can see we made the right decision for the actual direction here. Okay, the market actually ended up dropping only after stopping me out at 74 and then going up to 83. So a little bit, right? Obviously high risk entry. A lot of you guys skipped this one obviously because of the high risk status in the trade. But I really want to make sure you guys learn from this stuff. That's why I keep taking these higher risk trades in the euro right now, because I want you guys to see how we take them, how we enter them. And members, if I can help you guys avoid this in the future, guys, I'll gladly give up that $200 to do so. So as you can see, 1122, we lost 16 ticks. 12 per tick, guys, is 200 USD. Now at that point, I was a little bit frustrated. We didn't see it work out as planned. But you know what though? We always jump back on the horse. We keep following those rules. And again, it's how we react to those losses. Now we knew on that last euro trade, the loss was my fault. Right? I didn't follow my specific rules for a conservative entry. I took an aggressive entry. It wasn't the market's fault. Okay, so that means we can keep trading today because it wasn't a mistake that I of course, it was a mistake that I made. It wasn't a mistake the market made. So now we come, of course, half an hour later, you're back on gold. We're now back to the scalps again here now. Short-term trend down. That slope to my trigger line pointing down there. We break below the 15.6 here on the gold. We mark up our swing low. We break below that swing low. Now, gold got real choppy here, guys, after 11 o'clock, and that's a great example of it right there. You can see that little move down, then got sucked back up to the upside and took me out of my stop -1. So we take 2 off at +4, move that stop down to entry -1. We take, of course, that entry -1. So 2 off at 4, 2 off at 1, that's 10 ticks or 100 USD. And of course, finally here, at this point, we had about 20 ticks in our pocket, and we were talking about how patience always pays well. Well, here's a great example of how well patience pays. 11:59. We had just finished answering all kinds of questions. As you guys know, we don't close the room down until all the questions are answered. So we finished all the questions, and just as we're signing off, what do we see? The patience pays off, right? We see price, of course, come down. All of a sudden, we saw a green pace of the tape. Lots of big money sellers. We break below the support here, guys, just below 74 even. 73.90 was my swing low. We break below that swing low. Lots of big sellers. And we were kind of joking about this in the room because this was one of the only trades today that really everything fit in according to our rules. The only other trade was at 10.50 this morning on crude, which we of course this morning had identified as being our high percentage trade of the day. Don't forget, at 10.50 this morning, that 10.49 on crude, we defined that to be where we wanted to take our trade today. And of course, we ended up taking that trade right there. So it just so happened that the only 2 trades that really lined up perfectly for us today were the biggest winners. So if you could follow your rules, stay away from the more aggressive entries, guys, this could have been an 80, 100 tick day for a lot of you guys here. As you can see, I gave back $200 out of it, so I could have easily been over 80 myself. This last trade, though, here just for noontime, 84 was the fill. So as the price began to drop out of the sky, big sellers, momentum confirming to the downside. We got, of course, a little bit of slippage here, a good bit of slippage though. +4 target was filled to +7, got filled to +8, so 2 off at 7, 1 off at 8, 1 off at 16, guys, 38 ticks on the way down. And then, like I said before, today was a sideways day, so I placed my final target right here at the low of day. Right? That's that conservative target, guys. That conservative target locks up all that price, obviously locks up that profit, and doesn't give it a chance to give it back, guys. So make sure you guys are aware of that. And then don't forget, whenever we see that big drop at the downside here, don't forget, guys, we have that 2-step long off those lows. We called that one live with them as well. I was done at this point, though. Everything was moving pretty quickly at this point. We were done for the morning here at noontime. I'm not going to keep trading for noontime, obviously. But we had a 2-step pattern long. Always watch. Remember, whenever we see a big drop down to test that low, look for the bounce off those lows, and that's called a 2-step pattern long. Another opportunity to make some more money here late in the morning. All right, guys? As you can see, total it up, 62 ticks or 580. We learned a lot about this, guys. And as always, let's prep for tomorrow, Wednesday, May 19th, 2010. 8:30 Consumer Price Index, 10:30 crude oil inventories. We have 2 o'clock meeting minutes tomorrow, guys. So what's going to happen tomorrow is we're probably going to see things relatively slow tomorrow, potentially potentially until we get those FOMC minutes out 2 o'clock, and then the big money will probably come in once they know what they're talking about in those meeting minutes. And as always, I want to remind you guys, we come back tomorrow morning, 7:45 a.m. Eastern Time, so be here for that. Our beginners course shows you guys all the entry rules, all the entry patterns, our morning routine, guys, all the marks we trade, all covered in the beginners course. My name is Joseph James. Hope the video helps, guys. Lots of great trades going on today in the room. We'll see you guys tomorrow. Bye-bye for now.